Just Keep Buying. Proven Ways to Save Money and Build Your Wealth by Maggiulli is a data-driven and actionable guide to personal finance, focusing on two main pillars: saving and investing. The book outlines practical strategies for achieving financial security and growing wealth over time. Maggiulli simplifies personal finance by advocating for consistency in both saving and investing, rather than relying on timing the market or adhering to rigid rules. The core philosophy is embedded in the title itself. Just keep buying, a mantra of persistence in the face of market fluctuations and life's uncertainties. Below is a E10-word summary of the key ideas in Just Keep Buying. Introduction: the importance of action. Maggiulli begins by addressing the paralysis many people feel when it comes to personal finance, often overwhelmed by conflicting advice and economic uncertainties. He argues that the best way to build wealth isn't about making the perfect financial decision at every turn, but about consistently taking action, whether through saving or investing. He notes that the relationship between saving and investing shifts over time, and knowing when to prioritize each is essential to growing wealth. The book is divided into two parts: saving and investing. Maggiulli believes that saving is more important early on, while investing takes center stage as wealth grows. His advice is backed by both data and practical experience. Part 1. Saving. The first half of the book emphasizes the importance of saving money, especially early in one's financial journey. Maggiulli explains how savings act as the foundation for future investments and financial security. 1. Save what you can, when you can. Maggiulli rejects the conventional wisdom that people should save a fixed percentage of their income. Instead, he advocates a more flexible approach, encouraging individuals to save what they can, when they can. This recognizes that income and expenses vary over time. For example, early in your career or during tough financial periods, it might be harder to save. As your income increases, your ability to save also improves. This flexibility allows individuals to adjust their savings rate to match their circumstances, without feeling discouraged if they can't meet an arbitrary savings goal. The key takeaway is that savings are important, but how much you can save should adapt to your life stage. 2. Focus on big wins, not small sacrifices. One of the standout pieces of advice in Just Keep Buying is to focus on large financial decisions: housing, transportation, and career choices, rather than obsessing over small daily expenses like skipping lattes or meals out. Maggiulli argues that too much attention is paid to cutting small luxuries, while the real financial impact comes from larger, life-altering decisions like where you live, what car you drive, or the job you take. By making smart decisions on these big-ticket items, you can significantly boost your financial health without having to deprive yourself of life's small pleasures. It's these major expenses that dominate budgets, and managing them carefully will have a far greater impact on your financial life than cutting out small indulgences. 3. Build an emergency fund. Maggiulli stresses the importance of an emergency fund as a financial buffer. He suggests saving 3 to 6 months of living expenses in a liquid, accessible account, such as a savings account. This fund protects you from unexpected financial shocks, like job loss or medical expenses, without forcing you to take on debt or sell off investments at inopportune times. An emergency fund offers peace of mind and stability, allowing you to continue with your wealth building strategy even during difficult periods. 4. Income is key, but beware of lifestyle inflation. Increasing your income is a powerful way to improve your financial situation, but Maggiulli warns about the dangers of lifestyle inflation. As people earn more, they tend to spend more, often without realizing it. He encourages readers to be mindful of their spending habits as their income increases, and to save or invest a portion of any raises or bonuses, rather than immediately upgrading their lifestyle. By avoiding lifestyle inflation, you can significantly increase your savings rate and reach your financial goals faster. Part 2. Investing. The second half of the book shifts focus to investing, where Maggiulli provides clear and evidence-based strategies for growing wealth. 1. Start investing as soon as possible. One of Maggiulli's key principles is to start investing as early as possible, even if you don't have much money to begin with. Thanks to compound interest, small investments made early on can grow significantly over time. The most important factor in building wealth through investing isn't the amount you start with, but how long your money has to grow. Maggiulli advises against waiting for the perfect time to invest, as trying to time the market is a losing strategy for most people. Instead, consistently invest over time, whether the market is up or down. 2. Invest regularly, regardless of market conditions. The book's title, Just Keep Buying, refers to the strategy of continuously investing, regardless of market fluctuations. Maggiulli believes that most investors hurt their long-term returns by trying to time the market, or by getting scared during downturns and selling their investments. He recommends a strategy known as dollar-cost averaging, where you invest a fixed amount of money at regular intervals, for example, monthly, into the stock market. This way, you're buying more shares when prices are low and fewer shares when prices are high, which averages out your costs over time. By sticking to a regular investing schedule, you can take advantage of the market's long-term upward trend without being influenced by short-term volatility. 3. Diversification and asset allocation. Maggiulli stresses the importance of diversification in investing. By spreading your money across different asset classes, such as stocks, bonds, and real estate, you reduce the risk of losing everything if one investment performs poorly. He recommends index funds as a simple, low-cost way to diversify, as they provide exposure to a broad section of the market. Additionally, he discusses the importance of asset allocation, which refers to how you divide your investments between different asset classes. Your allocation should depend on your risk tolerance and financial goals. Younger investors can typically afford to take on more risk with a higher allocation to stocks, while older investors may want to shift toward more conservative investments, like bonds, as they approach retirement. 4. Let go of the fear of losing money. One of the biggest obstacles to investing is the fear of losing money, especially during market downturns. Maggiulli acknowledges that losing money in the short term is inevitable, but over the long term, the stock market has consistently produced positive returns. He urges readers to focus on the long-term trend rather than short-term volatility. By staying invested through both good times and bad, you give yourself the best chance of growing your wealth over time. Panicking and selling during market downturns can lock in losses and prevent you from benefiting from the market's eventual recovery. 5. Invest in yourself. Beyond financial investments, Maggiulli highlights the importance of investing in yourself, whether through education, skills, or experiences. Improving your own abilities can lead to higher income and better job opportunities, which can have a significant impact on your financial future. Investing in your health and well-being is also essential, as it can improve your quality of life and productivity. Conclusion: consistency is key. Just keep buying. Emphasizes that the key to long-term financial success is consistency, both in saving and investing. There are no get-rich-quick schemes or magic formulas, just a steady, persistent approach to building wealth. By following a flexible saving strategy, avoiding lifestyle inflation, and investing regularly without trying to time the market, anyone can build a solid financial foundation and grow their wealth over time. Maggiulli's approach is both practical and data-driven, making it accessible to readers at all stages of their financial journey. The book encourages readers to take action and trust in the process, knowing that consistent effort will pay off in the long run.